It's 5 o'clock in London. It's midday New York time. Midnight in Hong Kong, 2 a.m. in Sydney, 9 a.m. in San Francisco, and 9:30 at night in Mumbai. Good morning, good afternoon, and good evening, depending on where you are in the world. My name is Patrick L. Young. The IPO-VID live stream, Series 23, Episode 6 in the aggregate, that amounts to 138th episode, starts here. Maybe, just maybe, ladies and gentlemen, a seismic event is happening, and indeed our guest will remember that it's been talked about for the last 20 years. There is a case where, while the Bombay Stock Exchange is pushing back to reclaim ground lost, finally, ladies and gentlemen, we might be on a path to an IPO, yes, an initial public offering for the other major stock exchange of India. In fact, the dominant player, the National Stock Exchange of India, which has been precluded from having its shares publicly traded in recent years due to various whoops nasties, and indeed has been planning, thinking, or considering an IPO for the better part of 20 years or more. Meanwhile, much earlier in their path, the Ethiopian Stock Exchange, delighted to see they've raised $26.6 million to begin operations. Exciting times for capital markets in Addis Ababa. We wish them all the very, very best. I do believe there's a major league privatization is going to be their first issue in the near term. Elsewhere, talking about telecoms and all of that data thingy, well, a new model for friction and potential is a big winner. That's according to a NASDAQ Celent report, which has just been released, a new formula to help CFOs and accounting folks appreciate the new math, to appreciate also just how much you can save by operating in the cloud. And then, ladies and gentlemen, we have a fascinating and interesting deal looming. FEX Global, an Asian mega opportunity, has arisen down under in Australia. FEX Global, with a full exchange traded derivatives exchange license and many permissions to operate, such as counter agreement with the CFTC, etc., is up for sale or significant investment via JP Morgan. Watch this space. Of course, all these stories and more were in Exchange Invest, the daily bulletin of the Bourse business this past week. And indeed, the mainstream financial media haven't even spotted that FEX Global is up for sale yet. Can you afford not to stay ahead of developments in the world of market structure, I ask you? If you can't, then you should be reading Exchange Invest at exchangeinvest.com. Speaking of which, today we have as our guest joining us one of the most esteemed investors in exchanges in the history of the for-profit exchange era, which dates back to just slightly before the end of the last century, Thomas J. Caldwell. He's here to discuss with us exchanging investments. If you don't know who Thomas is, he's been in the investment industry since graduating from McGill University in 1965. He's president, CEO, and director of Urbana Corporation, which is a publicly traded investment company listed on the Toronto Stock Exchange and the Canadian Securities Exchange. He's also a past chairman of CSE itself, the Exchange for Entrepreneurs. And of course, ladies and gentlemen, you can remember we had a marvelous opportunity to chat to the CEO of the Canadian Stock Exchange some months ago on this show. Mr. Caldwell is a retired honorary colonel of the Welland Regiment and was a governor of the Toronto Stock Exchange. He's recognized widely throughout the world, indeed, as one of the world's foremost investors in securities exchanges. It's a delight to welcome you to the show. That's only a very brief bio. Good grief, we go into your bio for most of the show, actually, in one fell swoop, Thomas. Tom, welcome to the show.
Patrick, thank you.
Delighted to hear that all together, Tom. Where in the world are you today?
Well, I'm based in Toronto. Where am I in my thinking? Well, that's a movable feast, of course. We're still invested in exchanges. It's a little bit like owning the casino. We're still significant investors in the Canadian Securities Exchange, a wonderful business. And if you had Richard Carlton on, he's probably one of the most knowledgeable people in this space that I've known over the years. And at one point, we owned about 37 exchanges, or pieces of 37 exchanges. We were the largest owner of the New York Stock Exchange before they went public, and also the Chicago Board Option Exchange as well before they went public. And we were shareholders, as you know, of the Bombay Stock Exchange. So we've been in the space for quite a period of time.
Yes, it's incredible. I mean, you truly were all around the world. And actually, I was thinking that as we were reading out the starter story there, that you were invested in the Bombay Stock Exchange at one point in time. And indeed, India is an incredible story, which I'm sure we'll get back to. And yes, indeed, Richard Carlton, he was a marvelous guest for us and a very, very knowledgeable man with that very interesting business that you have a significant shareholding in, the Canadian Securities Exchange. So, Tom, tell me, you mentioned the fact that you kind of went straight out of university into the investment business. How did that happen? What piqued your interest?
Well, a friend of mine years ago, a well-known artist here in Canada, he said, if I ever get to heaven, it's because I'm backing away from hell. And my father was in the meat packing business, and I knew what I did not want to do. And so I went into my first brokerage firm. A fellow invited me, and I looked at this, and it looked like an ongoing puzzle, something I'd like to do, would keep my interest. And, I've been at it a long time, 60 plus years now. And I still love what I do. I love going to work. And it's the catering to a wide spectrum of interests. There's always something going on in the world. There's always something that is relevant. There's something, my job is to see the opportunities or try to get out of the way of the damage. So it still keeps me enjoying coming to work every day. So I started work with actually Lord Beaverbrook's old firm in Canada, Royal Securities, and ended up as a bond trader, and then worked my way right through literally every component of the securities industry.
Fabulous. And what drove you then to create your own business in Urbana?
Well, actually, the main business is Caldwell Financial, and we own brokerage firms, investment management firm, and Urbana is kind of it was originally started as my hobby farm, and so I've sort of morphed over to there to let our younger, smarter people run the brokerage and investment management firms. So I spent a fair amount of time there. Urbana. It sort of came into being. It was a shell. If I look back over the years, everybody seemed to have a gold mine, and I thought I should have one too. So I took over this shell that had some few claims in northern Quebec, in Urban Township, hence the name. And so I acquired more claims, expanded the holding there, and it was way at the back and beyond. You had to fly in, fly out, very expensive. But now it's become one of the gold mining hotspots or exploration hotspots in Canada, if not the world. So we still have a big block of land there where we haven't done anything with it. We're waiting for the major players to get involved. But as we were involved in this mining, I noticed that, it'd take me a week to get one fellow in the bush with a chainsaw, and he'd probably cut his toe off. And I thought I would convert it to an investment company. So basically, we took this company that had minus $40,000 in liabilities, and we were able to build it up to a little bit over $600 million. And we paid out $150 million to our shareholders, and then we're now back at $450. And my goal was to get it to $1 billion before I expire. So I either have to be very smart or live to I'm 115.
I think living to 115 seems a given. I don't think you'll have any problem.
That's
in the
wall,
healthy
apparently, by the way. That's the wall. You can't get past that, apparently. Somebody told me that the other day.
That's currently the thing that's quite tricky, is it? I see there's some former British military guy who was fought in the Second World War. He's now the world's oldest man. He's reached 112, 113. That's pretty impressive. And I quite like the idea. The thing that I find interesting is these guys who actually managed to live that long, and you discover that they haven't lived an entirely hermetic life. They have been known to drink the odd alcohol or have the odd cigar. That's
the secret right there. Of all the people I know, of my friends who are still around, all of us were the hardest livers of our bunch. One of our fellows who worked with, he's 85, and he was absolutely terrible. How he lived this long, I have absolutely no idea. And he's still with our firm and a partner of our firm. And so I'm one of the younger fellows related to him. But it's true. These people lived a life, kept a sense of humor, and kept mentally active. So I think that's part of the secret.
I think the keeping mentally active is obviously quite key. So, I mean, when you're keeping mentally active, it's very interesting. You were obviously involved through Caldwell Financial, through your brokerage arms and investment company and so on, with the different stock exchanges, etc. When did you have that light bulb moment that let's go invest in these exchanges?
Well, it was an epiphany of sorts. The Toronto Stock Exchange was pondering going public, having an IPO, and I opposed it because I grew up in Toronto. I didn't grow up my father passed away when I was very young. I didn't grow up in wealthy circumstances, and being a member of the Toronto Stock Exchange, was who I was. This was our thing, kind of thing. And I guess there was a little bit of ego or pride or God knows what in it. So I opposed it. And the seats were trading in those days about $50,000. So I didn't feel going public made sense. And one night I had this epiphany. I thought, I'm wrong. And I always tell our young portfolio managers, there's nothing wrong with being wrong. There is with staying wrong. But I thought about it and I realized these things. You see, my deep analysis showed me that not-for-profit companies tended not to generate profits, whereas for-profit companies tend to do better. So if you can convert it from, say, a co-op to a for-profit company, you would make some money. So the interesting thing is I shut up for 2 weeks and then came out and said exactly the opposite of what I'd been saying 2 weeks prior. And I would keep laughing to myself about the depths of my own hypocrisy, thinking, gosh, I'd make a great politician. And I kept saying, no, you don't understand. It was the timing I was referring to. I mean, I really give myself a lot of laughs in the process. It's quite funny.
But that's fascinating altogether, because I think a lot of us have been there where we viewed particular market moves and not been terribly impressed. I can remember not being terribly impressed with the state of early electronic trading systems around about the late 1980s, because they didn't really do a lot of things that floors could do. And then suddenly I started to see other systems coming along that complemented those. And I realized, oh my goodness, there's a revolution coming here down the tracks, which is going to completely change things. So you got into the idea, you have this epiphany during the time Toronto Stock Exchange starts to flirt with the idea of becoming a publicly traded company. That leads you into then realizing that there's value to be had south of the border. Is that the next move?
Absolutely. What happened, just to give you an idea, now it didn't happen all at once, but those $50,000 seats ended up being worth approximately $25 million per seat. It took several years to get there, but that was the game. But I went to New York at the time, and I keep trying to make space for the really bright people that are with me, the younger people with me. So I said that I'm going to go to New York and see what I can dig up in opportunities. So I became a member of the New York Stock Exchange. I bought a first seat for $2 million. And it was a start to it. New York is interesting. Every great city thinks it's the center of the universe, but New York, frankly, is very provincial in many ways, because if it has not happened in New York, it hasn't happened, or it's not valid. So even if it had happened in Chicago or Hong Kong or Toronto or London, it didn't matter if it didn't happen in New York. So I was able to sneak into town, and we ended up the largest owner of the New York Stock Exchange. The interesting thing, the first seat, as I said, we bought for $2 million. And shortly after that, literally in weeks, there was a scandal. Dick Grasso got fired. There was a special scandal for price rigging and whatever on the pension thing. There was a whole bunch of stuff happening. So the seats went literally from 2 million to 1 million in about 3 weeks. And I remember my partners were kind of grumbly at me, and I tried to explain that it usually took me longer to lose money like that. But that was the knife edge. The knife edge is, do you buy more or walk away? We decided to buy more.
It is interesting. I mean, your point about the relative parochialism of New Yorkers, I think, is very well made. In fact, in Exchange Invest newsletter this morning, we're discussing how 10 years ago in Exchange Invest, we were reporting on Jeff Sprecher then being the guy who'd bought into buying the whole of the New York Stock Exchange through buying nice Euronext. And at that stage, still, the New York kind of establishment hadn't realized how the business was about to make a great leap forward. And they were actually describing him. The nicest thing they'd said about him by that stage was that 10 years ago, that he was strong-willed, which clearly didn't go down well with all of those very, very in touch with their feminine side New Yorkers, clearly. And it was quite hilarious because you saw that. I mean, there was so much reaction to the out-of-towner Jeff Sprecher coming along with his Intercontinental Exchange and bidding for the NYSE. I mean, the temerity of it. Did you encounter anything like that as you built up your huge investment in seats? Well,
I mean, frankly, it was really funny at the New York. You do have an establishment-y. They're more stratified than the Brits are, of course. I could never be on the board of the New York Stock Exchange, even though I was the largest shareholder, and probably had as much knowledge as the whole board collectively had, because I was a Canadian. And you can't have a foreigner at the New York Stock Exchange. They brought in a new CEO at one point, Duncan Niederauer, and I can remember the discussion that he might not be our sort of chap because he only graduated from Colgate as opposed to Harvard or MIT. And I remember saying at the time he'd been running trading for Goldman Sachs. Possibly he learned something in 10 or 15 years at Goldman Sachs. Anyway, he became the CEO, but that was part of the discussion. It was very establishment-y oriented, or of New York and the Ivy League schools. Very, very much the case. So that provides the opportunity, because that's the closed-mindedness, if that's a word, that was evident there, which enabled me, some fellow from Toronto, to come in and accumulate seats before they realized that they'd invited in Attila the Hun.
Well, it has to be said, Attila the Hun with very good table manners, as I know from dining with you, and a remarkably good sense of rapport. I'm not sure Attila came in as a great raconteur during the course of his time. He just beheaded people and so on.
It's just a different style these days, Patrick.
That's obviously it, Tom. Indeed. We're here, ladies and gentlemen, discussing exchanging investments with Tom Caldwell, Thomas S. Caldwell of Urbana and Caldwell Investments. There are various different epithets to Caldwell Investment Management and the investment brokerage and so on amongst your wide-ranging group. If you have a chance, ladies and gentlemen, do ask us a question. We'd be delighted to deal with it. And also, while we're responding to your question, give us a little bit of love, because artificial intelligence needs love, ladies and gentlemen. And that artificial intelligence needs love in order that more people understand just what a great interview we're having today with Tom. So, Tom, you go and you do this investment in the New York Stock Exchange. And if I may say so, you became an overnight sensation, even though those who say had chanced to Toronto previously or some part of the Canadian investment landscape would have heard about you without any great difficulty. What was it like when suddenly lots of people all around the world were very eager to engage with you over investing in exchanges?
Well, it's really it was a slow space. There wasn't any scramble to say, gosh, we have to be associated with Tom. He's such a great fellow. That did not happen. You really had to elbow your way in to many of these companies, these organizations. And many of them didn't understand the asset that they had, how it could be changed. There was a lot of mind lock. The arguments that I was confronted with were the same arguments I made when I felt the Toronto Stock Exchange should stay private. So I knew where they were coming from. And in fact, I had a meeting with traders at the New York Stock Exchange during this period of time when we were campaigning for them to become a public company. And I was in a meeting with about 30 or 40 traders, and it was getting really ugly. And I had a cartoon. I brought it with me, and it's of a rat crying. And it says, Tom Caldwell mourning the loss of Ford trading. It was in the Globe and Mail in Toronto. And I said, listen, I'm a trader. I'm not interested in closing the Ford. That may or may not come. But, I'm interested in the New York, and it says, I love trading. I love the action. I love the New York Stock Exchange. And that was in the cartoon. And this went around the table with all these traders, and I was one of. And that was a very important thing, because the specialists owned the seats, and they were the ones that controlled the votes of the New York Stock Exchange at that time. So you had to win over the specialists. And they were all Damon Runyon characters. And it was really, I had more fun in that deal. I said, very rarely involved in a deal where everybody makes money. We changed the place for the better, had a boatload of laughs, and met some people to be friends my whole life. It was just wonderful, really interesting characters.
And what was the dynamic like? I mean, going from, say, the Toronto Stock Exchange to the New York Stock Exchange, in terms of, it strikes me the New York Stock Exchange was a somewhat more multi-ethnic place, perhaps, but maybe I'm wrong.
Well, it wasn't multi-ethnic. It was only 3 ethnic groups. And I loved it. It was a microcosm of New York. The New York Stock Exchange was made up of Jewish, Italian, and Irish Catholic members. That was it. 3 laid-back groups. How they all didn't kill each other, I have absolutely no idea. I hung out with the Jewish guys because they were the funniest of the whole bunch. But there were so many funny things that happened. It's like history. Real history is the stories behind the big story. And if I might bore you with one very quick one.
Please.
One of the traders was very much opposed to going public. And another trader called him and got his answering machine. And he said, listen, Billy, if you don't agree with this, you better start checking under your car. Well, Billy goes to the police. It's on television, on CNN. And I'm a trader. I recognize people by voice. I know who the fellow is. So the next thing you know, this is post September 11th. It's the SWAT team to this trader's house. He's by the way over 75 at the time. I mean, masked machine guns. They drag him out, and they have a hearing the next day. And the judge finally realizes these are just a bunch of old fogies, and that's how they talk to each other. So they sentenced him to take a course in anger management. So I just sent him the DVD of the movie. But it was all this Damon Runyon stuff. In fact, once the traders, they had a meeting at Buttonwood South, and a fist fight breaks out. Yeah, these are all guys in the mid-70s. You know, but I loved it. I loved the action. I love the guys.
That's fascinating altogether. So you watched the epiphany, then the New York Stock Exchange, and a lot of people have forgotten this now, that of course the New York Stock Exchange didn't IPO. It had this remarkable inversion. It effectively did a reversal going backwards, in fact going across the time zone to the west, and pushed itself into the Pacific Coast Exchange, effectively into Archipelago, if I remember correctly.
Yeah. So they didn't do an IPO per se, but it still was a big campaign necessary for people to understand why it made sense. We, as exchanges, you tell everybody else they should be public companies, except you yourself. But it makes for better governance. It makes for better staffing. It makes for better salaries, and it makes for greater efficiencies. And but that sounds very simple saying it now. It was not at the time. It was a fight.
Couldn't agree with you more. I mean, my book, Capital Market Revolution, which came out in July the 1st, 1999, was saying exactly the same things, that it was weird that we had the people who were the ultimate acolytes for capitalism were themselves mutual organizations that were effectively run as a quasi not-for-profit. It seemed very, very odd. And actually, I'm going to break into your line of thought there, because that's a very good time to introduce our finance book of the week. So Tom's going to take a rest for a second, grab a glass of water. Let me tell you, we had a guest a few months ago. He was absolutely magnificent, just like today's guest, Thomas S. Caldwell. Johan Norberg makes the case for capitalism. The Capitalist Manifesto, Why the Global Free Market Will Save the World, is a case for capitalism and the vital role played by the free market in today's uncertain world. He argues a move away from global capitalism would not only squeeze the growth out of the economy, but also deepen already large social exclusion for the vulnerable, for the world's poor. It would be a killing blow. For all of you who believe out there in growth, in better markets, in improving the lot of everybody on this planet Earth, as I do passionately, and indeed I think I can speak for Thomas in that regard as well, let me tell you, there's no better book that you should be reading at this moment in time than Johan Norberg's, our book of the week, The Capitalist Manifesto. You can get that book, bookstores anywhere. And if you want to indeed catch up with what's the best book of the week that we're going to be recommending for the next week, don't forget that's in our free weekend newsletter, the EI Weekend. You can sign up for that at exchangeinvest.com. And while you're there, if you haven't been a subscriber before, pick up a free 30-day trial of Exchange Invest at exchangeinvest.com, the newsletter of the Bourse Business, the place where you can learn all about what's happening in the wonderfully exciting world of financial markets. For only $375 per annum, it's like having your ear right against the water cooler of the Bourse Business. Now, Tom, coming back to you, I mean, it's an intriguing situation because you were there. You were in the front line as this remarkable revolution took place, and we saw all manner of people moving all across the universe of going from mutualized to for-profit. In the background, also, there was a huge digitization move going on where lots of floors were closing down, and that was revolutionizing the exchanges itself. You said, I think if I got it right, you got up to 37 different exchanges you've invested in over time?
Yes. Yes.
That's incredible. So tell us a little bit. I mean, what was the weirdest, wackiest, and most far-flung place that you ended up doing a deal, and what got you there?
Well, you don't have to go far flung to get into weirdo, you know, but India was the challenge for us. We, after a whole series of negotiations, we ended up purchasing just under 5% of the Bombay Stock Exchange, which was a private company. And of course, it was quite a campaign to get them to go public. And sometimes managements are quite comfortable with the mutually held thing. They like the limousine going to work and heading the Bombay Stock Exchange. Even though it was the National Stock Exchange, it was becoming ascendant at that point in time, the Bombay being the retail exchange. But that was a fight. And then we bought some stock, and several big hitters in the States bought some seats. I bought percentages of the business. Then they engaged a study called the Welland study. Welland was a professor.
Oh, yes.
And it came out it began with the conclusion that exchanges were natural monopolies. Well, somebody should tell at that time, 60 different exchanges in the US that they're all natural monopolies. Therefore, profit should be controlled, salaries should be controlled, dividends should be controlled, pricing should be controlled. In fact, it was a de facto nationalizing. And this was a horrendous thing. And the ghost of Welland's still there. I don't know if it's still a prof someplace, or he's been defrocked, I don't know. But we ended up having to campaign using both lawyers and the media in Bombay to keep pushing in this direction. We had Brendan Caldwell, our eldest son, had meetings with the regulator in India. And, they were kind of a funny bunch because they said, we've had no pressure from people to go public. And they're the letters we've actually written to him personally and sent back to us and said, nobody's mentioned it to us. Well, lying usually requires a third person. You can't bring an outsider if you're not going to be forthright. But that was a long, long, long fight. Finally, it did occur. Competition was brutal because the Indian government at that time was very much favoring the National Stock Exchange, which was more the institutional exchange.
Yeah.
And because Bombay there were some scandals going on there, and it was very strange. They owned that building in Bombay, and part of being a member, you had an office in the building. A lot of the members were given space in the building. It was really a hodgepodge. We were involved in it several years, and it was not one of our more successful investments. But our most successful investment in India, if I could digress for 1 minute,
please.
Through the Bombay Stock Exchange, we invested in building an orphanage for little girls in Bombay called Angel Nest, the Dorothy Caldwell Home. We have 30 little girls there. And that's been my greatest investment, those kids, and watching them grow up. The oldest girl just got a full scholarship in medical school. So my benefits and profit in India were more psychic than they were financial, but it was still worth it, a great investment in the girls.
That's beautiful hearing about the Dorothy Caldwell orphanage. I did not know that story. That's quite incredible. Unfortunately, I only saw the downside of that because I too was with you there in the trenches as they were across the road arguing against Jalan. I think at a couple of op-eds in the Indian press at the time. And I remember a series of meetings. And I think the problem to me was it wasn't necessarily that the official would actually be telling mistruths. It was just that somewhere in the 73 levels of bureaucracy between you and actually meeting him, or Brendan actually meeting him, that there were 27 different apparatchiks who were all told to kill anything that was remotely critical and don't send it further up the paperwork chain. That's what I always got the feeling of, was there was always this huge middle in the SEBI organization, which was there to extract anything that might upset the boss before his morning tea, and therefore the message never got there.
Yeah, I think you're absolutely right. But mind you, in this case, the letter was addressed directly to him.
To him, yes, I know. But that's only. I mean, just because you actually wrote the letter to him, addressed it to him, and said, "Dear," his name. It's a touch and go thing as to whether that person's ever going to read it in the Indian bureaucracy. In my experience,
what it does. One of the things in North America, probably more than say in the UK, we are in a bubble here. We think in our terms, and we think other people think in our terms. Once you get involved internationally, you're dealing in different cultures. I may come to my partners and we see a problem, we may come to a certain conclusion. Sometimes other cultures can come to another conclusion 180 miles from where our conclusion is. And we found this in different places. So we just had to try to tune in to what the thought process was. It was interesting. We owned part of the Budapest Exchange at one point in time. And the Vienna Stock Exchange, Wiener Börse was going to make an investment in it. Of course, you have history bumping into these things as well. So it was an interesting. We actually did a deal there finally, but we did a lot of deals in the Boston Stock Exchange, smaller exchanges, Vancouver exchanges. So there were a lot of smaller ones that became consolidated. And Jeff Sprecher, to his credit, he didn't buy the New York Stock Exchange. He wanted to get at Euronext,
of course,
or the London Stock, Life, if you will. Those were the real deals to get in that. There for a long time there has been no money in trading cash equities. It's in the data. It's in all the peripheral things that you work, because it's too competitive in the cash equities. But I understand where he was coming from, and I met him many years ago as well. So.
No, it's incredible what he's done as an entrepreneur, and demonstrated just how successful the for-profit business model can be with his remarkable organization across the planet. And actually, we've got a question from someone who's seeking to emulate to some degree the Jeff Sprecher experience. We've got James Beattie from TIFOS, I think is the organization he's setting up, the Toronto Futures Exchange, if I remember correctly. It's a new thing. Hello, Patrick. Hello, James. Does Thomas care to comment on my FX Global comments from Friday? Does Tom see implications for Canada? Thank you. The much power-pointed James Beattie of CEO of TIFOS Group Holdings. Thank you very much, James, for your question. I'm delighted to see you've still got a sense of humor, and I hope you're getting there towards getting everything established. Interesting question. I mean, FX Global, set up as the competitor exchange for derivatives in Australia, has all the permissions ready to go, does certainly look rather redolent of something like the situation in Canada at the moment, albeit you have the TMX monopoly and no direct competitor in the futures and options space.
Well, James, hi, James, by the way, we know each other personally as well. A couple of our people are looking at this and looking at the proposition that he is involved in. My concern in Canada is our capital markets are shrinking dramatically. Again, not getting on the futures there, just getting off it a tiny bit. But certainly for mid and smaller cap companies in Canada, it's a very, very thin market. Our market's dominated by the Canadian chartered banks, about 80% of equities. And that means they have to stay with index encoded companies, et cetera. But that bias, that focus is still to big conservative things. The futures exchange, I just wonder the size in Canada. I think Australia is quite a bit ahead of us in terms of innovation. I think there's a possibility of it in Canada, but I can't comment on it directly because one of our analysts, Tom Simopoulos, is working on that project right now. I think Jim has had meetings with him.
I think that's a very interesting pointer you make. I mean, certainly what interests me, though, is it's fascinating how in Canada, there's been so much growth in equity competition in one way, shape, or form in recent years. I mean, there's the TMX, there's the Canadian Securities Exchange, which you're involved with, which is obviously very dynamic in the sort of middle and the lower end of capital raising and so on, and developing particular niches. And also then there's been the things like the NEO exchange and so on that's now become NASDAQ, and CBOE have crept into Canada as well. How do you see that? Because there seems to be certainly a lot of hyper competition around about that sort of TMX monopoly in the larger caps.
Well, there is. And there's a lot of, the bigger the competitor, the more gaps are between them for opportunities for smaller and mid-sized organizations to start, as Mr. Beattie was just pointing out. I think in terms of Canada and exchange, the cash equities, generally speaking, the key to the game is listings. If you get the listings, that's sticky. Trading can come and go on a daily basis. And we are involved in trading operations, very, very exciting one I can mention in a few minutes if you wish to. But
go for it. I
think the thing is the listings business. The listings at the Canadian Securities Exchange have grown very, very dramatically. And sometimes it's by topsy and good luck. For example, cannabis was legalized in Canada, and a lot of companies, that whole industry became public in Canada. But the Toronto Stock Exchange would not list them because the president of the TSE at the time was an American. And he was worried going back home on the weekends, he might end up on jail trading cannabis stock. So they all came to the CSE. And that was a tremendous shot in the arm to that business. But not in the cannabis space alone, because as lawyers and accountants and dealers started to go public through our organization, they realized it was easier, cheaper, more accommodative. And we do have a secret weapon at the CSE. We are nice to our customers. And the consequence, that business has grown dramatically, whereas the TSE itself had 0 new listings last year. 0, which is not only a comment on that company, but it's a comment, and not to put them down, it's a comment on Canadian capital markets. So the listings business is very, very key. NEO is kind of interesting, but NEO, I know Josh Schmidt, who put it together under the Royal Bank, and Josh is a really smart guy and a friend. But it really is a trading system that does a lot of business on behalf of the Royal Bank. I was quite surprised that CBOE decided to come in that direction. But anyway, maybe they're going to make something of it. We'll see what happens with it. But still, the TSE is the 800-pound gorilla. Make no mistake. Their venture exchange is not. We don't believe it's as competitive as the CSE is actually. So it's a different landscape. But the key to the exchange, the cash equity business, is listings, and that's what London had as a great advantage for many years. If they haven't blown it via Brexit or whatever.
Well, yes, it's a very interesting point to London. I think the difficulty with London is, even regardless of Brexit, when you look at the overall marketplace, I mean, it was actually effectively larger in 1999 than it was 25 years later. And that's the problem I see, rather than by the time we reached the Brexit referendum, there was already 16 years of relative decline. Stock prices were no higher than they'd been at the turn of the century. And that was, in fact, they were lower than they'd been at the turn of the century. So there's a huge amount to unpack there. You also hit upon a series of fabulous guests we've had in recent time. And certainly, of course, Richard Carlton, once again, the head of the CSE. And I've got to say, I have to quote you there. We have a secret weapon at CSE. We're nice to our customers, which I think is an epic remark in the series. And certainly, no, I applaud you for that, because one of the things which I find very, very interesting is if you take the example of CSE and you also overlay that with Jeff Sprecher, what do you get? You get people who are obsessed with what their customers actually want and delivering that, rather than going out from on high and telling the customers what they ought to be getting. Now, of course, you've always got a certain element of, as Henry Ford said famously, I mean, his customers would have asked for a faster horse. But nonetheless, it's a very interesting debate. We also had Josh Schmidt on our show previously. And let me say thank you very, very much for that great question, James Beattie. Good luck with your endeavors. I hope they all come to fruition in due course. And well, I'm very excited to hear what goes on, of course, with Brian Price's FEX Global as well. Now, Tom, if we take a step back at the moment and look at kind of all these different deals you've done, there was one exchange, I'll let you into a secret here, an exchange that came onto my radar. I was aware of it. It's not actually an exchange, it's a marketplace platform. And it suddenly had explosive growth. It's absolutely incredible. I go Google it, and as I'm looking down there, I see the smiling visages of two great men of the exchange parish, your good self and indeed Mr. Richard Cotton on the board. You tipped a moment ago that you were going to tell us all about a very exciting trading platform. Has my masculine intuition found the right path to Asia? Is that the business that you're talking about? If so, do explain more.
Well, yes, it is. This is a blue ocean trading. It's an alternative trading system at the present time. The thesis behind it was to enable retail investors in Asia to trade American securities during their daylight hours. And many years ago, a lot of the major exchanges tried to implement 24-hour trading. London, New York, Toronto, I think Hong Kong, tried to bring all these, so the book would go around, like for example, in the bond market, for the big bond trading firms, the book would just travel around the world overnight.
Yes.
But on the equity side, you have a whole series, you have regulations, you have clearing and settlement. There's a lot of complexity, so it was never able to take off. So at any rate, Blue Ocean, really good, solid management team. And, it's interesting as an investor, sometimes in early stage companies, the most important thing is not necessarily the idea, and that is critical, of course, but the ability to execute, the team that can do it. And the character flaws of that team will determine success or failure. So it was a very good team. They presented this concept, and we decided to invest in it. And I was laughing. The commitment I made was larger than we usually make in our first go around in investment in exchanges. And I remember thinking to myself, as a typical retail investor, oh, I put in too much, I invested too much. And then as it started to really take off, I didn't put enough in it. I didn't put enough in it. So I'm susceptible to the same whims as Mrs. Smith trading her 10 shares or whatever. But what happened is that, for example, we did an exclusive with a South Korean big brokerage enterprise. And by the way, the South Koreans, they're bigger traders than the Chinese are. I mean, they're huge in terms of volatility and market cap. They'll trade half the capitalization of huge major companies in the morning. That's how aggressive they trade. So we did an exclusive, but it didn't really take off. Sometimes with exclusives, they tend not to. But during that hiatus, we found out we weren't trading necessarily American securities for Asians overnight. We were trading American securities for Americans overnight. So they expanded the trading hours from 8 to 4 in the morning, for example. And then after that exclusive came off, lots of other dealers in Asia came on board. And so they've come into it, and some additional very heavy duty partners have also come on board. We own, Urbana owns about, I think, 38% of that exchange, of that ATS. But once these additional dealers came in, the volumes we traded expanded fourfold, fivefold, tenfold over month over month, which then presents the issue of now we got to build out the plumbing, the infrastructure to make it industrial strength, and we've been doing that and have done that. And that goes not only hardware, software, but also staffing. And we've done that. So our volumes are going up quite significantly. And so far, there's no real meaningful hoofbeats coming up behind us in terms of competition. I think anybody who's closest to us is probably going to be a year plus behind us. But we've established significant connections with major trading organizations who will make a book overnight. So traders in Asia can now trade. Now, it's an institution can always trade on a one-on-one, on a binary basis with a major firm like Goldman, and they would call a market against you. But this enables, the individual trading in his or her room or office during the day to be trading right on against these market makers who are maintain very tight markets when New York is closed. So the cliche is, the world doesn't stop. Why should trading? And I think it's all going to go eventually to 24 hours, period. But we are taking a major chunk of that business, and we're way ahead of schedule. Starting a new thing like this is very complex. You have to have mechanisms in place for regulation to cope with all the SEC, and there's a lot of work to do. And it's several years before you even see the daylight of profitability and cash flow. We're profitable now, way ahead of schedule. So I think this has the potential of a very significant profitable investment for it. And eventually we might do an IPO ourselves, or eventually we may be taken over by a major exchange. But it's a very attractive investment. And it really just opens up the world to more trading in U.S. securities. I think that's a positive.
It's fascinating. I mean, I really was blown away by the sort of volumes that Blue Ocean was doing so relatively rapidly. And as you say, well, you give the example of being Mrs. Smith and thinking that she hadn't quite bought enough. I think in the case of Blue Ocean, clearly every day you've got thousands of Mrs. Tanakas or Mrs. Youngs, but Mrs. Youngs of South Korea rather than someone like my own Mrs. Young, who were worried about how much they've bought. It's an incredible business, and the growth and expansion is incredible. And also what's fascinating is it tickles, for want of a better term, the settlement G-spot, because with the US going to T+1 along with Canada and Mexico just after the US Memorial Day holiday, that provides a huge headache for a lot of companies in Asia because they've got a very narrow window for settlement. But actually, if they're trading on Blue Ocean, they've effectively got T+1 from the day after they actually have traded because of the way the trades are booked. So therefore, there's more than adequate time to do the banking. So it may actually be a huge resolution to the headache for a lot of traders across Asia, which will probably drive even more business to Blue Ocean. I was absolutely stunned by the business. It was great to talk to the management the other week in a call. And I think it's most impressive. And I certainly think you've got a fantastic investment there, even if it was slightly larger as an initial investment than you usually make. But it looks to be going pretty reasonably well at the moment.
I should have put more money in it.
Well, it's easy to say.
Yeah, but we may come in for another round or two as time goes on if they need more cash. But it is a good investment. And if you've talked to them, they're good people. It's a good in-depth management team. And that's so important in newer enterprises, that you have a team that gels, that works together, that are competent, ethical, energized, if you will. It's a good bunch. I'm very happy with it.
Fascinating. And therefore, I don't want to ask about what you're particularly looking to invest in at the moment or what you're maybe negotiating on or something like that. But in general, Do you still think that there's a huge amount of potential then for the exchange model?
Yes, I think we're probably going to enter another period of consolidation at some point in time. The big alliances are already there, but there are smaller exchanges that may or may not be taken out. We own a thing called Miami Exchange that has a series of futures and exchange of commodity exchanges, and that came out of our Minneapolis Grain Exchange investment and our Bermuda Stock Exchange investments. But so there's a lot of stuff still to be done in there, and there's a lot of progress to be made. For example, blockchain, the mechanism behind the cryptocurrency, that's almost the holy grail in the securities industry, because if you can tokenize securities, and by the way, the CSE was a leader in moving in that direction, then you have instantaneous settlement. You get rid of capital risk for the broker, and it saves a lot of the back office friction and costs like depositories. It's just boom, it's done. And so that is going to be a really exciting area in the future. However, with this FTX, this Bankman-Fried fellow, blowing up, all the regulators just took all those files and put it in their bottom drawer because no one wants to preside over a disaster. So as a consequence, that whole initiative has been slowed down, backburnered, at least for a year or two, a couple of years. But that will be one of the great innovative areas for exchanges going forward, I think, whenever that does occur. And it will occur at some point.
Yes, and I think it's very interesting because the one point that I would make about that whole thing is, while there's a lot of people spearing off in one direction all to do their own crypto thing, they all think that they're going to be the winners at the end of the day. Whereas the one thing we notice from the 25-year plus history that we've both had from sitting around watching exchanges and capital market revolution, ultimately, the very biggest brands tend to still be a lot of the brands that were actually around previously. I mean, ICE is really the only brand that has been created in the exchange industry that did not exist 25 years ago. And in fact, Miami Exchanges is the next largest independent brand that's on the go that I can think about at the moment. Everything else is essentially a previous monopolist which found the true path of reform and enlightenment.
Absolutely. And as I say, you got to give kudos to Sprecher, but I would always laugh. You see, I always keep joking, if you're sort of a self-made entrepreneur, if I use the phrase not pejoratively, new money, you're always looking for legitimacy. So if you can buy the New York Stock Exchange and become establishment in one fell swoop, it's great. I used to love it in New York. I would be part of my job there as investment manager was schmoozing on the Upper East Side. And I'd be chatting to people and they say, "Oh, Tom's from Canada or Toronto." And people would literally walk away. But as soon as I owned a seat on the New York Stock Exchange, they said, "Well, Tom's a member of the New York." I was establishment. I was in. People wanted to talk to me. They thought I was brilliant. So I can understand Sprecher's motivation at the New York Stock Exchange.
I think there's almost a book in that in itself, because certainly the story I've heard about that is quite fascinating. But I think the one thing, not telling any tales out of school, was that Jeff, who was previously the boss, the CEO and chairman of the multi-billion-dollar Intercontinental Exchange, when he then served a spell as chairman of the New York Stock Exchange, he found it was remarkably much easier to get restaurant reservations around about the tri-state area. Let's put it that way. Definitely, I think there is that fascinating issue, and I think the other great statistic that pops out of my head at this point in time was when they created the first female CEO of the London Stock Exchange, Clara Firth.
Clara Firth, yeah.
She had, Clara Firth. I think, if I remember correctly, Clara had something like 2,000 media requests for interviews. And the point was, it was the usual 500 from all the world's financial media. But then there was this hugely long tail that, because she was a woman, went through quite literally Vogue, Harper's and Queen, Harper's Bazaar, all the way out to like Homes and Gardens, which I know Clara quite well, but I can honestly say I've never discussed horticulture with her at any point in time. And I've no idea whether she's particularly interested in it. But because she was a woman, suddenly every magazine, including even the sort of supermarket tabloids, wanted to talk to her. And that's certainly something fascinating about being the boss of a stock exchange. Good grief, I can even remember when I was the boss of the second largest stock exchange in Romania. At the inaugural press conference, which we gave in Bucharest to introduce me, all these guys start asking questions about, so who do you think's going to win the soccer derby at the weekend, which was between I can't remember, Dinamo Bucharest and Steaua Bucharest, I think, are the two big local teams. It's like, I have no idea. I know nothing about football, but fortunately, my mouth just sort of opened like this, and my PR guy jumped forward with this perfect answer in Romanian, which was like football, football analysis, halftime chat. And it's like, that's what you pay your PR guys for.
Well, I think we might. I think you have reminded. I think we may have owned a piece of the Romanian stock exchange. If we didn't, I knew we were negotiating for it.
I think you owned a base of the Romanian stock exchange, and I actually ran the Sibiu exchange, which was the futures and options centric exchange, which eventually got killed by local politics. Because let's put it this way: there's two phrases that are not to be found in any dictionary in the world. One of them being as pretty as an airport, and the second one being high Romanian corporate governance standards. It was a very character building discussion, Tom, and I think if I discuss it with you next time we meet, I'll probably drive you back to the Demon Drink. Actually, it was quite an experience. So we're running into the last 10 minutes here. It's been a really fascinating show. We could talk about endless numbers of things over time. And I do remember as well, I think one of your 37 investments, you were invested in Sofia, the Bulgarian stock exchange at one point in time, which raises a whole other series of fascinating corporate governance issues. As you sit here looking on this business, I think we're in heated agreement. I mean, I think, one, there's a huge wave of consolidation. I think, two, the exchange marketplace model still has a long way to go. I mean, I think that there is a huge opportunity for new markets, as something like Blue Ocean has just proven, which has essentially gone into an area where you would think somebody had already done it. And here it is, a huge success, because there was this latent customer demand of the Mrs. Tanakas and Mrs. Youngs of Korea.
Well, the interesting thing is that the one thing about exchanges, you see all these products that are being developed, derivatives of every variety, and structured products that people are making. I mean, those are the things that are like Topsy. They keep growing up dramatically. But at the end of the day, they all have to trade someplace. Yeah. And so, as I said earlier in the meeting, it's very much like owning the casino. They have to come through your place. Now, yes, margins have been compressed. I understand that. The competition is brutal, but there's money in the data. Like, data used to be about a third of the revenues of an exchange. Yeah. It's a very significant portion of the business. So the business has morphed to a different business model. But like it or not, this multiplicity of new products will end up trading someplace. Or what we did in say Blue Ocean is just bring in a new group of players to play directly in this thing, which will expand volumes, and I think make the world a little bit more international. I always think that's a good thing. So I'm quite enthusiastic about it. I think there's lots of positives that happen. It's like technology. I'm not smart enough to really understand technology, but I buy the companies that can benefit from technology. That I can understand. Same as exchanges.
I think that's a great point altogether. So therefore, Thomas, I think it's an ideal point to ask that question we ask all of our guests. Thomas S. Caldwell, you've been a marvelous guest this afternoon. Where do you think the capital market revolution goes next?
Well, we're in a kind of a pause situation because, like it or not, it is geopolitical. And it should be integrated probably more than it should. World trade has helped human progress dramatically. And we're entering a period where everybody's going a little bit nationalistic again for obvious reasons. But I think we have to weather through that cycle, and it's going to come back again because the evidence is incontrovertible that larger trade, world trade, integrating of world markets does benefit the less developed countries dramatically. And we have to do that. We can't leave people behind. Everybody's worrying about changing the world's temperature. There are people starving. Let's deal with that stuff. Let's deal with improving standards of living. That's probably the best formula for peace I can think of today.
I think that's a marvelous note to end on. And also because of the fact that you actually practice what you preach in that globalization method, thanks to those 30 young ladies, as they now are, who've been given a great opportunity at life in India, which is something that, let's face it, you wouldn't have known about unless you'd managed to get all that way over to India and had to spend that time with SEBI and investing in the Bombay Stock Exchange, etc. It's quite fascinating altogether.
Can I end with one point?
Please.
My dear wife, suffered cancer and everything. She had to go through the whole mess for several years running. And those little girls at that orphanage got together every morning before they went to school to pray for Dorothy Auntie. And it meant so much to my life, and she's been cancer-free for many years now. So that's the sort of peripheral or most important benefit of my investment in India.
You're bringing a tear to my eye, Tom. We don't usually end up with an emotional moment at the end of these shows, and that's really beautiful because I think it's a great demonstration of your humanity, of the good things that markets can bring to the world, of the wonders of your beloved wife, to whom I think you've been married for, if I remember correctly, the 60 years or slightly longer.
56 years or something.
56 years.
I better not get that wrong, or I could be.
No. Very good, actually. I'm sorry. That was really unfair. I didn't pre-warn you and put you on the spot with that one. So I'm
doing the mental calculation.
I'm terribly sorry. Yes, that was rather beyond the scope of what I was hoping to discuss today, and I didn't pre-prepare you for. The sharp intake of breath in the background was your PR and marketing team going, yes, no, it's a sign of a great and happy and stable bond, both with your wife and your family in the world of exchanges. Thomas Caldwell, this has been incredible. I hope we can do it again sometime. I've got to say it was a joy from start to finish. Thank you for joining IPO-VID. Thank you to James Beattie for that fabulous question. Look forward to catching up with you too soon, James. Let me say a huge word of thanks to Jamil, Racy and Fernando. I will also wish you all a very happy, I do believe this is Philippine Veterans Day, and I think it's important to remember our veterans the world over, wherever they've been, and not just when I'm dealing with an esteemed veteran in a Canadian regiment such as Thomas himself. We'll be back next week, ladies and gentlemen. In the meantime, we're off to build other exchanges and marketplaces as best we can. We got a fabulous discussion next week, just hot on the heels of the Ethiopian Stock Exchange being funded last week. We're going to talk about the building of the Ethiopian Commodity Exchange with Bharat Kulkarni, who I saw just the other month at the AFM conference in Bangkok. That's going to be a great show. Join us same time, midday Eastern time. And don't forget, ladies and gentlemen, catch up with the water cooler of the Bourse business at exchangeinvest.com. My name is Patrick L. Young. Thank you for watching.
Thanks, Patrick.